so we're very clear about the amount of capital that we're comfortable lending. We're not trying to hurt the seller, and we're not trying to hurt the buyer. Neither are we trying to get the loan amount higher for our own gain. I mean, because if we fund this loan, right, and it's too much leverage for the business based on the cash flow, then we're really setting that business owner up for failure in the future, and we're very serious about that.
Tim, Live Oak Bank just isn't a funeral home lender. You are a funeral home bank. Tell me, what does that mean?
Yeah, and then when you think about bank, you're really thinking about a full service to the customer to meet all their banking needs. And when you think about banking needs, businesses need capital to grow and expand. Businesses need capital to renovate and adapt to their customers. But at some point, whether you're just getting into that business or buying that business, or whether you're having an opportunity to expand your market, there's an opportunity and a need to get growth capital, right? And that can look very different over the course of the life of a business, right? Starting small and then really scaling up. And it's exciting to see where a lot of customers end up. So you have that relationship. And I think of a bank as a group of individuals that understand a business to the point to where they really can help guide and direct a customer to make the right choices early, so they can establish themselves to be able to be a candidate for, larger dollar exposure as their business grows. So that's one thing. So setting them up for success. Also, I see a bank relationship as being able to kind of steer a customer in another direction and saying, hey, not yet, right? We're not comfortable yet. These are reasons why. But the other part outside of capital, you got to think about the day-to-day operating account of a business, right? That is an instrumental part of a business, of being able to see data related to where your money's going out of your account, to be able to see your loan balances, your checking and savings in one spot, to be able to budget and plan. That is a part of a banking relationship, and that's something that we are excited to offer customers.
I love it. And so, I mean, you do so much in that banking relationship, but why should a funeral director care about you being a funeral bank?
Yeah, I mean, I think they should care simply because, a business owner, I've been a business owner in my past, and currently a business owner, not only here in my role, but outside of the bank. And the day-to-day, the monotony of making business decisions, learning an area of the business that you don't know, understanding your competitors, it can become overwhelming when you have to make financial decisions. And I think it's important for a funeral home owner to have a banking relationship with a bank that understands their business, because they can help guide and direct them and set them up for success and tailor their products and services to meet the needs of their day-to-day. And I think if you don't have a banking relationship and it's just a transactional relationship, you're not going to have that depth of guidance and input on the relationship, and I think that's very important. I would appreciate that as a business owner in my past.
Yeah, for sure. So what are some of the things that Live Oak can offer funeral homes?
Yeah, so starting out, we have our operating accounts. We have one of the higher yielding, if not the highest yielding, online savings rate, and that fluctuates, of course, with the market. So that's a one-stop shop there. If the funeral home is making loan payments out of their operating account, they can set that up with us. A lot of funeral homes are getting away from cash transactions, but depending on the market, they're still dealing with that. So that's something that we don't have branches, right? And that's where we encourage our funeral home owners, hey, maintain a local bank relationship, and you can easily sweep that cash to your operating account here and have it all on one dashboard. And then you can have access to cash as well. So that's one piece. And then your long-term financial planning, that's where the online saving comes in. It really doesn't make sense for a business to have money sitting in a low interest-bearing account that they're not going to use for some time, right? And so you can be strategic about making sure you're maximizing the return on your capital. And then you have your CDs, right? If you know you're not using capital for 1, 2 to 3 to 5 years and you putting that on reserve, then you should be really thinking about even a higher yielding vehicle. And that can be seen and done all in one spot. But even more importantly than that, as we mentioned before, Live Oak Bank is different because we have an entire team. I mean, when I say entire team, we're talking about lenders, underwriters, closers, even construction specialists on renovation projects.
Got to meet a lot of these great people too. My time here.
Yeah,
with you guys.
yeah, it's really cool to walk around because we're all here together. That's the other thing. We're not spread out across the country. We're all in one place here in southeastern North Carolina, and we collaborate together on opportunities. And when you take the operating side, the banking side, and then you take the experience of the loan and then the guidance on the future of access to capital, I just think it's a really good setup for small business owners to be able to focus on what they love and what they're passionate about, knowing they have somebody that has their back.
Well, one of the things I want to ask you about, because we've talked about this extensively with your team, we came together and talked about it. Tell me a little bit about the strategy. So outside of the banking aspects of being a bank, the strategy that you bring to the business.
Yeah, and that's actually very important. Making the wrong decision early in the growth of your business from a loan or debt perspective can be detrimental. It can be hard to correct. And oftentimes we use the word leverage to describe that, right? If a business early on in their career levers up, therefore they get high percentage financing early, interest rates climb as they did last year, you start to get in a crunch very, very quickly. And we've seen that this year with some really, really strong businesses. So I think it's really important to really look at the best product to be able to provide your financing needs without creating too much leverage so you have some left for the next opportunity. And that's a big part. Also, you think about SBA, you think about traditional lending. There is a time and a place for both of those in the life of your business. And that is a very strategic decision, right? How much liquidity do you have? What's the right product? We need to save more liquidity now for later. This transaction has a lot of goodwill in it. What's the best product for that, knowing that you have a high real estate opportunity coming in your future? So there's just a myriad of steps we need to take in understanding what the best product at the right time is for your business based on your characteristics.
I love that. And so give me an example. We talked about transparency and the truthfulness that your team and you bring to the table when you're in a conversation with what the exact needs of that customer are. Give me a quick example or story of that transparency.
Yeah. We actually have had a lot of interest in the past couple of years with a lot of individuals that have a desire to own multiple rooftops in this space. They see an opportunity. There's a lot of funeral homes for sale. We know that. That's been happening. It's going to continue to happen. And they see an opportunity to create economies of scale. And where we really come in is we want to make sure that they have a proof of concept, that they have a strategy and a plan to the market out of their own protection. And then we'd like to set clear expectations with them of, hey, this is how much money that we probably can lend to you in year 1 through growth in year 2 and year 3, and that expands over time. So we're very clear about the amount of capital that we're comfortable lending based on the stage and the journey that a particular business is in. When you're thinking about more of a first-time borrower or an independent borrower that's only looking to buy 1 or 2 rooftops, in a transaction, we're working with buyer and seller all the time. We're very consultative in that way. We're not consultants, but we feel that way. And we're not trying to hurt the seller and we're not trying to hurt the buyer. Neither are we trying to get the loan amount higher for our own gain. So we're very transparent about what the business can handle in terms of debt. I mean, because if we fund this loan, right, and it's too much leverage for the business based on the cash flow, then we're really setting that business owner up for failure in the future. And we're very serious about that. And so sometimes most of the time, we're actually trying to bring the package down, right, to make more room for the borrower. And so our level of transparency comes from I think, the non-commission based environment that we have here.
All right. Okay, so that the non-commission based environment is something that is a big value. You broke this down for me quickly the last time we were together.
Mm-hmm.
Tell us what that is.
Yeah.
Like how does that even work?
Yeah. So, it has its challenges because you want to motivate people to go out and discover loan opportunities, and you want them to work really hard and have that eye of the tiger. And as we look around banking in general, that's a big part of it. When you look at sales in general, commissions is the sole driver. Right. And let's all be honest that when it comes to us coming to work every day, we're doing that to provide for our families. And it really comes down to what we get paid. But that's not what makes success. What makes success is having people align with their passion, finding a why behind what they do every day by coming into work. Mm-hmm. And that's where we place our focus here. And our passion and what we've connected to, and we've been able to get our lenders and our teams here to connect with that, is making small business owners successful for the long run, okay? So we choose to reward people based on credit quality, how long we're able to maintain a customer, a happy customer. And yes, there are goals related to levels of production, but we're driven more on the success of our customers. And after a while, that gets a little contagious, and you realize how unhealthy a commission-based environment can be. Not saying it always is, but it can be unhealthy.
Sure. But then in the environment here, you can walk this campus and just see the culture that's been created here. So, I mean, Tim, that's a wealth of information, and I would say that listeners can take that information to the bank.
I love that. Let's do that.
All right. Let's take it to the bank.